Here, our next guest accurately predicted the housing and financial collapses of 2008. Now he says, despite speculation that the recession is over, happy days are not here again. In fact, he says things are going to get much worse. He's always saying that, though. Peter Schiff, president of Euro Pacific Capital, nearly $1.5 billion in assets under management, spending the last hour of trading with us. Now what? Why do you say that things will get much worse, and what would be the catalyst? What will push us there? Because I hear a lot of people saying that. We've had the best July in 20 years for the Dow.
Well, remember, we had a disastrous 2008. I mean, the market dropped 50%. I mean, so you're going to get some kind of rally out of that. But remember, the underlying economic problems that led to the crisis are not only still with us, they've actually worsened. And, you know, when people are jumping to the conclusion that, oh, the markets are going up, therefore the market is forecasting recovery. Remember, the market failed to forecast the recession. The recession started in December of 2007. The Dow was at a record high 2 months before that. So the market was completely blindsided by the biggest recession since the Great Depression. And, you know, there were a lot of people, you know, on this network. I remember in late December and early January, February of 2008, telling people we were in a recession. They were still saying we were going to avoid one. So if you have economists who couldn't even forecast a recession that had already started, and a market that was clueless, why would you want to draw any conclusions from a market rally that this means that the recession is over?
But don't you go where the profits are? And we have had great profits since March 9th. And if you didn't have your customers in American stocks that did unbelievably well, I'm thinking Wells Fargo jumping way off its lows here.
Well,
then are you missing out for your clients?
I remember, as everybody knows, you pointed out, I mean, my clients, like most people's clients, we all got clobbered in 2008 because we were long stocks. I had been long stocks for 10 years.
But how could that be, since you predicted this in October of 2007, right here on Fox Business?
Right. But I also predicted a weakening dollar, which we didn't have in 2008, but which we have now in 2009. But if you look at what's happened this year, sure, U.S. stocks have recovered a little bit, but foreign markets are on fire. I mean, U.S. stocks are standing still compared to what's happening overseas. Many of the stocks that I own, not only have they recovered, they've actually made new highs.
In fact,
there are stocks that went down 70% last year that are now higher than when they started.
In fact,
you know how much you have to go up?
We put together a list of some of your best performers, and we want to put some of them on the screen here because it gives us an indication that you don't have to be in U.S. companies, some of them U.S., some of them not, to really make some great gains. You like Crescent Point Energy, up 49%. Yara International, what country is that out of?
Yara's in Norway.
Up 43%. Statoil, of course, up 32%. Ascendus, up 31%. Potash, 31%. A lot of people would really like to see these kinds of returns.
Well, those are, you're talking about this calendar year, and those are just, look, I'm buying about 100 different stocks for people. I mean, you know, there are different stocks. There are stocks that we own that have up close to 1,000%.
Which
from
one is
October.
up 1,000% from October?
Well, the biggest gainer of the stocks that I've bought is Skyworth, which is a tech company in Hong Kong. But in late 2008, the stock was trading for barely over 1 times earnings. And it had a yield of about 14%. And so the stock has gone up tenfold from that point, that low point in October of 8. Now, all the stocks haven't gone up that much. But if you look in general, if you look at what's happened to foreign stocks, you know, the Hang Seng has doubled on the year. The Chinese market, I think, is more than doubled. And I took a look back over the last 6 years or so. If you'd have been invested in Hong Kong stocks, I think the average return is about 30% in Hong Kong. Even though the market was down 70% last year, even including that 70% drop, you're still up about 30%, whereas the S&P is up about 3%. So you got 10 times the returns
over
6 years.
Over 5 years, the S&P is actually down more than 20%. I mean, we were just looking a couple of weeks ago at the Tel Aviv stock index. Over 5 years, it's up more than 25%.
Yeah, well, the U.S. market is down over the last 10 years. I mean, it's been a lousy place to invest, and it's going to get worse.
That's Peter's point. The U.S. is a lousy place to invest.
Unfortunately.
So you go elsewhere.
Yes, unfortunately, the policies that we're pursuing in Washington, at the Federal Reserve and in Congress, are detrimental and destructive to our economy.
Too much
They're
spending?
destructive to the value of our money. You know, when people are investing, the most important thing is the value of the dollar. You know, what are your investments worth in purchasing power? The dollar is at a new low again today. This is a new calendar low, and it's going to keep on falling because of the policies. The dollar's drop was briefly interrupted last year. It is back. It is back with a vengeance. We can be create a currency crisis by the fall.
Well, that's what Steve Forbes is in agreement with you on. He says a strong dollar is very crucial. Well, the senior economist with macroeconomic advisors says today's ADP report, it's a jobs report, and that the recession ended in June. But with the report still showing big private sector job losses, has the recession really come to an end? Peter absolutely says no. Shivani Joshi, what do you think?
Well, look, I think there's a difference between recession and recovery, and the data that we are continuing to get. To Peter's point, if you look at the markets and you look at all the data that we're having, there's a big disconnect between what the markets are doing and what the economic data is showing. You can still be out of a recession but not be in recovery mode, and that's going to show job losses, and that's what the report out today showed.
We have cut in half the losses, Chris Cotter. I think at the lows we were down close to 700,000 jobs. That's what we were losing. Now it's more like 350, 400,000.
Okay, still losing 350, 400,000. I think, sort of similar to Shibani's point, I think we need to make a distinction between what economists feel like the technical indication of the end of a recession is, and what psychologically the people out there, the Cro-Magnon men like me, feel like the end of the recession is. We don't know, macroeconomics from home economics. So we are fearful for our jobs. We see our neighbors losing their jobs, and whether the technical indicators say we're out of a recession or not, people out there still feel like we're in it.
Peter Schiff, is it sort of a red herring to look at job losses and say, well, we've cut those in half?
Well, look, I mean, we were losing jobs at a rate that was probably impossible to perpetuate continuously. So we're now losing jobs at a slower rate, but we're still losing jobs. And we're going to keep losing jobs. Unfortunately, the government is interfering with job creation by distorting the markets, by taking capital away from businesses and entrepreneurs that could help rebuild the new economy. Right? They're preventing jobs from being created. They're trying to prop up companies that shouldn't be in business, and they're borrowing so much money to finance additional government, additional spending, like this not cash for clunkers nonsense. All this stuff is destroying jobs.
Well, if you're so against the government, will you run for government? Wait, don't answer that question. We will be asking Peter Schiff coming up, because I am hearing rumors about some Senate run. State of Connecticut? Well, we'll ask him in just a minute. Closing bell ringing in 49 minutes. You're welcome. He just testified before the Senate about this. He thinks some of the ideas are completely wrong. So let's bring in the group here and talk about how they think the system could actually be fixed. Peter Schiff, you buy research, but you've got it. Is it in-house? How do you get the research on your stocks, which are now up 39, 50%?
Well, I mean, all the stocks vary. You're looking at, and your screener asked me for some stocks that had ADRs. I think most of those stocks were just some
Those
names.
are American Depository
Right.
Receipts. They're foreign companies that trade here.
That people could buy. But I mean, stocks this year, many stocks are up 200% and 300%. I mean, some stocks are up less than that.
Where do you get your research?
But now we're doing our own research. I have five analysts that I employ right now, and we do research. We study companies. The analysts go and visit the countries. They they talk to the management of the companies.
What was the problem here?
Well, with what?
With the ratings agencies.
Well, look,
that's what we're talking about.
Going back to the rating agencies, I mean, first of all, to have the companies that are underwriting the securities paying the rating agencies, that was an inherent conflict of interest. But I think a lot of people, including the clients, were looking the other way. I mean, I pointed out real time in 2005 and 2006 that the ratings were bogus, that a lot of this AAA rated paper should have been rated, junk. It should have been rated F. I knew there was 100% probability of default. And if I could figure it out without any analysts at my disposal, without any information, everybody had to know that these securities and these ratings were bogus, but they were buying them anyway because in the short run, it paid off.
Okay, we've got the stocks you need to keep your eye on as the trading day wraps up next. And then a quick programming note. Tomorrow on Money for Breakfast, Alexis Glick will sit down with former Hasbro chairman and CEO. What is everybody watching right now? Peter Schiff, you take it first.
Well, I'm still watching the dollar. I'm watching the bond market. The dollar is weakening. That's going to take its toll on the bond market. Also watching commodities, watching oil prices. I expect oil to move a lot higher. I wouldn't be surprised if it hit $100 a barrel by the end of the year, if the dollar does what I think it's going to do. So people have to pay attention to what's going on in those markets, and don't be distracted by nominal gains in the Dow.
We have a question for Peter Schiff, Shibani, and Chris, because I've been hearing the rumors. I know you have too. Let's show the campaign button. Is this on the street? Schiff for Senate?
Where'd you get that picture?
Are you running for Senate? Are you going to announce your candidacy for Senate?
Well, you know that I might. I mean, we've been talking about this. I'm seriously considering running. I have a website, schiffforsenate.com.
Is that yours?
Yeah, it's my exploratory committee. Okay. So I am definitely looking into it.
Would you run as a Republican, an independent?
Well, what my intention would be to run as a Republican. So first I'd have to get the Republican nomination. There's 3 people already in the race. But, you know, Chris Dodd is the incumbent, and we certainly want to get rid of Chris Dodd, but simply replacing him with another Republican politician isn't going to be much of an improvement. What we really need to do is change Washington. I mean, right now, everything that they're doing is wrong. I mean, they're doing the exact opposite of what they need to be doing.
I got to tell you, the markets, Shivani and Chris, don't seem to be saying that right now. They have come way off their lows of March 4th. What are you watching, Shivani?
Well, I'm watching a small group of financial-related companies, asset managers, private equity firms, hedge fund companies. We're actually seeing pretty decent results out of this group. Fortress narrowed its losses. Blackstone is out tomorrow. American Capital, the obvious notable exception, didn't come out with great numbers, but this is a pretty strong group today.
Chris Cotter.
Now I'm watching Procter & Gamble. Disappointed with earnings a little bit this morning. Stock's been under pressure all day. But on the same day they disappointed with earnings, they announced a big deal with the NFL. They became one of the league's 21 major marketing partners. Now P&G spends about $8 billion a year globally on ad spending, but not a whole lot in terms of, the sponsorship. So they're going to become the official locker room products of the NFL. They can slap that NFL logo on Old Spice and Charmin if they want.
Well, so Chris, his name doesn't really rhyme with anything. Schiff. It's not like I like Ike.
All I got to say, it doesn't have to rhyme with anything. Just put that glamour shot that he had on that button. That's a sell right there, Mr. Schiff.
We should get your high school.
Get it better. What is that picture?
I love it. Look at that right
You know
there.
what? I have his high school. I have your high school yearbook.
You got to stop acknowledging your age. I mean, you're going to lose some fans here.
Never.
I got a lot more gray hairs
than you standing next to me. All right, Peter Schiff. We'll wait to hear whether he announces his Senate candidacy. Closing bell ringing in 21 minutes. Dealers be able to keep up with this unbelievable demand if the program gets more money? Chris, it would just be another $2 billion.
Well, yeah. Well, I mean, we saw what happened in that first week, really going back to the beginning of July. The thing about it is, the answer to your question is no. I mean, you look at Toyota, just for example, they're at right now about 30 days supply, and on the Prius just at about 13 days supply, when they usually want to be at about 60 days supply for each model. So they're going to have to ramp up production, but that's what you want. That accelerates that dollar through the process, ramping up production from all the big 3 and the foreigners.
Shivani.
How times have changed when you just say it's only $2 billion.
I know. True.
Well, here's what I worry about a little bit is that if we don't have enough of these cars on the lots, people may end up not buying by putting their purchases on hold because there aren't cars for them to buy. Maybe they'll save the money, maybe they'll use it for different purposes, because the uneasiness, if we have if we have some bad economic data, if we have some additional ripple effects, which many people think we're going to have in the commercial real estate industry and other areas, they might not end up buying at all, and all of this goes to kind of waste.
Peter Schiff.
Well, look, the whole plan is an example of the government making the economy worse. The economy is going to suffer as a result of cash for clunkers. It is hurting the economy. Think about what we're doing.
People are buying cars.
No, think about what we're doing. We're taking cars that work, that we already own, right, that people were driving, and where there's no debt attached, there's no car payment, people own these cars. We are destroying them. We are pouring acid on the batteries, we are crushing them, we are taking a working asset and destroying it. Then the government is going into debt to send people money so that they can take on more debt to buy a car that they didn't need and they couldn't afford. And the result of this whole disaster is that we're deeper in debt than we were before. That is not the way to get out of this mess. We should not be buying new cars. We need to drive the clunkers that we have. What we need to do is get back to work. We need to make stuff. We need to save our money. We need to produce, because that's the way you get out of a hole. You don't dig yourself deeper.
We are not a manufacturing society anymore. That
well,
is
we
true.
have to be. We can't not be.
We should be, but we're not.
But we're going to be again.
Okay.
Otherwise, we're going to be a poor society.
All right. I'm not going to hold my breath, but I mean, I would love to see that too. Closing bell ringing in 10 minutes. So the stock is up 8 3/4%. Our thanks to Peter Schiff of Euro Pacific Capital, and you've had some big stock winners here, most of them from out of this country. Which country do you think emerges from this recession most strongly?
Well, I think Asia is going to be the most dynamic. Anything tied into China, the stocks in Hong Kong and Singapore, stocks in mainland China are going to be strong. And I still like all the resource stocks that got beaten up last year. All the stocks that got beaten up in 2008, those are the leaders now in 2009. They're coming back. And I think what we're seeing now is decoupling. This is not a U.S. recovery. The U.S. economy is going to be in a depression for years to come. But ultimately, our foreign lenders, our suppliers, that the financial crisis is abating abroad, and real economic growth will return overseas.
Listen, he feels strongly about this. He's made money in other countries. Peter Schiff of Euro Pacific Capital, great to see you. We are 5 minutes from the close, so let's count down our 7 late.